The economic conditions are worsening globally. We are witnessing a decoupling of the markets worldwide as chaos begins to spread. This will undoubtedly get worse as time goes on and real money leaves the system and the fake printed fiat currency enters these markets and becomes the only thing left. Today, we're going to talk about the petrodollar disaster as the global markets go insane. Now, you came here for the truth, so let me unveil that for you. Flesh and blood advisors face threats from robots. This right here is out of time. And they're talking about Fidelity and Charles Schwab will offer automated financial advice that's low cost or even free, pushing other advisors to be tech savvy to compete. Now think about that for a second. You have these people who are essentially robots told what to sell based on their commissions that they get, the incentive programs they receive, and they are essentially all selling the same things. Money is flowing all in the same direction, but now even they are being too independent. They need a robot to provide that information to the public, and that's essentially what's happening anyway. All of their money is being put into the system. Now, whether it's put into one stock or another, is it banking stocks, is it something else, it doesn't matter. It's all going into the paper system, and that is funding and fueling this terrible financial economic system that they have going. We see where that's headed, that's for sure. So this is a big thing that I'm noticing now, how robotics and automation are supposed to be helping us, are supposed to be making our lives easier, but I'm seeing it as basically eliminating jobs. That's the way this is working. Now I'll get into the job scenario in a moment here, but let's just go into the petrodollars right here. This is out of Reuters. Petrodollars leave the world markets for the first time in 18 years. That's according to BNP. And the highlighted portion says energy exporting countries are set to pull their petrodollars out of the world markets this year for the first time in almost 2 decades. Really big news here to talk about. Now, what I want to say about the petrodollars is that obviously the petrodollar, being that term used, for those who don't know, we are looking back into history as the US and Saudi Arabia made a deal and essentially said, look, you sell the oil that you sell in US dollars. You can, you do that whole conversion, getting US dollars essentially, and it's going to support us, the US economy, and as a result, we'll protect your oil fields. We will protect you. We will send you that billions of dollars of foreign aid to make sure that everything stays good for you. And this has been a deal that has been working out for them for really a long period of time now, but we see how things are changing globally. Now, they're suggesting that this has a lot to do with the price of oil. Certainly could be, but you need to understand that things are changing globally. I'm not saying that things will change overnight, absolutely, but things are changing in the markets, and the prices at which these commodities are at right now seems to be more and more fictional. We're seeing the markets breaking every single day. There have been a lot of changes that have been occurring, things that don't make sense. I'm not a technical analyst, but I'm noticing the people who are those technical analysts are seeing phenomenon that are not supposed to be happening within the market. And this is a very big concern for those who are invested in these paper assets. Let's go into this. Japan's 30-year yield. And you're seeing here how there's actually a very big problem for them, especially considering that they just promised to print an unlimited amount of currency required to push this market up, and still they are not doing well in many instances. We're seeing their stock market drop significantly, even though they promised to destroy their currency as a result of everything that they've been doing. Japan's not doing good, that's for sure. You can see this as a prime example. Despite what the financial advisors will say, we can see that printing money Doesn't do anything for the currency. It doesn't do anything for the stock market either. Now they're going to pump it up. They're going to have to step up their game. They need to get into the trillions and then quadrillions of yen in order to have this market come up at all. This right here is the decoupling that have been seen. Now, Bullard mentioned the QE4 or additional quantitative easing coming in the near future should they need it. And you can see where the S&P has gone definitely. But the 10-year yield, WTI crude are all moving in different directions right here. And this is that decoupling that we are witnessing. Historically, all markets used to move at different rates, but then at approximately the year 2000, we witnessed all around the world the stock markets moving in sync with each other, and that is a good generalization. But right here, you're seeing different things happening. But I just want to say that this could change tomorrow. But there are many things because of these computer algorithms that are running these systems, because we have central banks really being the primary buyers of the stock market, we are noticing many problems occurring. And once again, a big concern. This here is where it extends into the real economy. Now, this is a lot of what I talk about here at the Money GPS and in my book. We can look at the statistics that they show us every day in the news. Sure, the S&P is up, and sure, the bond yields, the treasury, so on and so forth. But let's get into the real economy, because that's what it matters to me. That's what matters most. What does your wealth buy you at the end of the day? So this is the entry first-time home buyers, and basically showing you this. The share of first-time home buyers hits a 27-year low. This is out of the Wall Street Journal, this information. So you're looking at individuals for decades low right here, unable to buy homes. Now, why is this the case? Mark Faber talks about this too, but essentially, they're not able to afford it. And even though the real estate in the U.S. crashed down significantly from its highs in many areas, you're looking at this being a big problem for people because, quite frankly, they can't buy a home, a very simple thing that they need, their food, their shelter, but they are requiring incentives in order to buy them. They can't even afford food in many cases. 50 million Americans on food stamps. You're looking at a really big problem because they're not going to be able to buy homes. And I've talked about this before, how more and more individuals statistically are going into renting. And this isn't because they want to, this is because they have to. I'll move on quickly here and just showing you a diagram I used in my book. This chart, the 30-year mortgage rate, now the statistics are fairly accurate even today, showing you, look, over the past few decades, we've had practically a straight line downward in the 30-year mortgage rate, but other mortgage rates as well. Interest rates generally declining over these past few years, and yet still the public is unable to buy and afford big ticket items like a home. That's why they're choosing to rent more. And I'll move on just very quickly. Just wanted to add this in here. This is an interview from a panel that they were on with Alan Greenspan and Mark Faber. Mark Faber actually was able to ask Alan Greenspan a question. He said, "You mean to say that the Federal Reserve is not independent?" And then Mark Faber says, he immediately said, "Mark, I never said that the Fed was independent." That's what he said. "I never said the Fed was independent." In other words, the Fed and the Treasury and the government is basically one and the same. That is very telling information right there. The Federal Reserve is essentially seen as the head of the snake. They are all part of one entity against the public, and you can see historically how they've been doing this, working together in many ways. Of course, they're not transparent in any way, but you can see how they work together to make the people more and more poor. It is working significantly, particularly over these past few years since the financial crisis, since they colluded together in order to bring these markets down. And I'm talking about the real economic factors. I wanted to say that I'm trying to bring out my YouTube to expand onto Vimeo and Daily Motion as well, just more as a backup. I found a program that will do this for me for free, so I can get a few uploads onto there. Should they shut me down on YouTube, I will still have a means of getting my information out there. So I'm working on that right now. I'm also working on a method to get these YouTube over to iTunes podcasts. I've had some interest in there. If anyone else has more interest in there, please let me know, and let me know any other suggestions that you do have. I'm always interested and open to new things on here. And of course, don't forget to give me a thumbs up on here. I really appreciate that a lot. The more thumbs up, the more I realize that I need to continue on and continue to push out these videos is very important, as I'm aware. And of course, you want to be an insider. The Insider is where I give out all my best intel for free, and that is available at themoneygps.com. You scroll down to the bottom, fill in your email address, and you get occasional emails from me with good, short, concise info.